Hi friends, welcome back. No live TCSs this week because I have lunch appointment with Kelvin Liu on Sunday, so I will do a recording instead. Earnings season just started, so I guess over the next 3 weeks, I will be giving update on my holding companies. This past week, only one holding company reported their earnings, which is TSMC. The share price shot up after the earning release as the results were quite impressive. The weekly return was 5.64%. If we zoom up and look at the past 1 year, the share price actually went up by 87% as TSMC is currently riding on the AI wave and the financials from revenue growth to profit margins are showing decent growth. Let's look at the financial numbers. Let's start from the revenue. The latest quarter revenue is $26.4 billion, which is a record quarter. Last 12 months revenue is $88 billion. Year-over-year revenue growth is close to 39%, which is an impressive number. Remember, TSMC is already a huge company in the semiconductor space, and yet it is able to grow at such a high rate thanks to the AI chip demand, and also I believe TSMC is taking market share from the competitors. Let's look at the net income. The latest quarter earnings is $11.4 billion, and on last 12 months basis, the net income is $35.7 billion. Free cash flow over the last 12 months is $26.5 billion. The reason there is a gap between the earnings and the free cash flow is because the company is still investing heavily in capex to meet the future growth and demand. Net margin is 43% as shown in the chart. Next, I will go through a couple of comments from the earnings call that I think can give you some idea on the prospect of the company. First, robust AI-driven growth. Revenue from AI accelerators, which we now define as AI GPU, AI 6, and HBM controller for AI training and inference in the data center, accounted for close to mid-teens % of our total revenue in 2024. Even after more than tripling in 2024, we forecast our revenue from AI accelerators to double in 2025. AI is a megatrend reshaping technology, and TSMC's ability to capitalize on AI accelerators underscores its critical role in this transformation. Tripling revenue in 2024, followed by anticipated doubling in 2025, demonstrates TSMC's unmatched capability to meet surging AI demand. This growth isn't just a short-term boost, but a structural trend. TSMC's leadership in producing chips for high-performance AI applications gives it a dominant foothold in a market expected to expand exponentially. Second, technology leadership and innovation. Our 2nm and A16 technologies lead the industry in addressing the insatiable need for energy-efficient computing. N2 is well on track for volume productions in the second half of 2025 as scheduled, with a ramp profile similar to N3. TSMC remains at the forefront of semiconductor technology, leading the global race for advanced nodes. The successful ramp-up of 3nm and the readiness for 2nm production solidifies TSMC's technological edge. This ensures it continues to attract high-value customers requiring cutting-edge solutions like AI and 5G processors. Third, resilience through global expansions. We are leveraging our fundamental competitive advantage of manufacturing technology leadership and large-scale manufacturing base to be the most efficient and cost-effective manufacturer in the regions that we operate while supporting our customers' growth. TSMC's expansions in the US, Japan, and Europe demonstrates its proactive approach to geopolitical risks and customer demands for localized productions. The Arizona fab is already in high-volume productions with yields comparable to those in Taiwan. These investments not only diversify operational risks but also cater to growing customer preferences for geographic flexibility. This positions TSMC as a trusted partner capable of meeting global semiconductor demand while sustaining premium pricing for localized productions. Fourth, strong long-term growth projections. Underpinned by our technology leadership and broader customer base, we now forecast the revenue growth from AI accelerators to approach a mid-40% CAGR for a 5-year period, starting off the already high base of 2024. A CAGR of 40 to 45% over 5 years is an extraordinary projection, especially starting from a high base in 2024 when AI-related revenues already tripled. This indicates a sustained and robust demand for TSMC AI-centric technologies, including GPUs, AI ASICs, and HBM controllers. It also reflects TSMC's ability to scale productions efficiently to meet surging AI-driven needs across data centers, edge computing, and other high-performance computing applications. Lastly, let's briefly talk about valuations. The forward PE is at around 19, which I think is quite reasonable. In the past 5 years, the forward PE ranged between 10x to 30x, so I believe 19x forward PE is near the midpoint. At this PE, I will not say the company is extremely cheap to invest in. When the company was traded below 15x PE, I made quite a number of videos to promote this company, but the semiconductor was at down cycle back then. Now the results looks good, so it makes sense for the PE to be traded at a higher level. For now, I'm holding on my investment and enjoy the growth. I strongly encourage you to look for companies that you are willing to stay invested for many years. In my case, I've owned TSMC since 2020, so it's already 4.5 years, and I foresee myself to continue invested in the company for many years ahead. If you like this video, please give some support, like and subscribe. See you in the next one. Bye bye.